Hello, and welcome to the Mortgage Porter Weekly. I'm Rhonda Porter, mortgage advisor in the greater Seattle area, here with your update for the week of July 27th, 2026. Let's start with a recap of last week's housing and economic news. After 2 months of declines, new home sales rose 1.6% in June, coming in above expectations at a seasonally adjusted annual rate of 628,000. That's a nice sign of resilience in the new construction market. Home prices also kept climbing. ICE's latest home price index showed prices up 0.26% from June to July, bringing a year-over-year appreciation to 1.7%. Since the start of the year, prices have been rising at an annualized pace of about 3%, and even modest appreciation adds up. On a home of 500,000, 3% gain works out to roughly 15,000 in equity in just 1 year. And these figures are nationally based, not our local Seattle area. On the jobs front, weekly unemployment claims dropped to 187,000, down from the 209 to 217,000 range we've been seeing over the past month. That's the lowest level since 1969, though it's worth noting that new identity and eligibility verification requirements for unemployment benefits may be contributing to the delays or cancellations in some filings. So this number may not be telling the full story. And on the broader economy, geopolitical concerns kept weighing on oil markets. The conflict in Iran escalated last week, which pushed rates higher. Though there's currently a pause in attacks, with reports of possible negotiations happening through third-party intermediaries. That's giving mortgage rates a bit of relief today, which you'll see in just a moment. Now let's look at mortgage rates. According to the Optimal Blue Index, the average 30-year fixed rate last Friday, July 24th, came in at 6.647%, slightly higher than what I shared a few in the previous week. A quick reminder, though, that this reflects about 35% of mortgage transactions from lenders who use Optimal Blue when they go in to lock in an interest rate. And you can't lock in last week's rates today, and your credit score, loan to value, and other factors, such as how many points are being used to buy down a rate or if any points are being used at all, will affect what rate you may receive. So if you would like a current rate that is current and based off of your personal financial scenario, please reach out to me. I'm happy to help you with that. There's a lot on deck this week with the economic indicator. We have the Fed's rate announcement coming Wednesday. No change rates expected. Currently, odds are at about 37% for a rate increase. Remember, the Fed does not directly control mortgage interest rates. They control the Fed funds rate, but markets will react to actions the Fed takes and what is said following the meeting. Rates will continue to be largely impacted by the conflict in Iran. Let's check in on mortgage-backed securities. It's 1:15 p.m. as I record this Pacific time, and you can see just how much movement the mortgage-backed securities have had since the start of the war. That first series of red candlesticks shows rates moving higher, and it's been a bit of a roller coaster, and we're hoping for resolution soon. This week's In the Spotlight, I want to share something I'm really excited about. The medical professional mortgage, or also known as the doctor loan, is now available for nurse practitioners, CRNAs, and physician's assistants. So this has been a question I've received a lot from nurses wanting to also have access to this mortgage program. So I'm just very happy to be able to share this with you today. With a 700 credit score, you can get 100% financing up to $1 million, or up to $1.5 million with a 720 score. If you need to go all the way up to $2 million, that's available with 5% down. There's no monthly mortgage insurance required, regardless of your down payment, and it works for both home purchases and rate term refinances, not for cash out refinances. It can also work for delayed financing. This program looks at the bigger picture of your career and the earning potential, rather than penalizing you for the student loan debt that so often comes with advanced medical training. So if you are a NP, CRNA, or PA in Washington State and thinking about buying or refinancing, I'd love to talk with you about your options of using this program too. I hope you have a great week. If you or anyone you know are considering buying, refinancing, remodeling, or maybe a retirement type mortgage anywhere in Washington State, even if it's months away, I'm happy to talk with you. Take care, and I'll see you next week. Bye-bye.